Hello trader, welcome to a new video where you'll see the workflow that my students and I use to create our intraday trading strategies for scalping. In this video, besides seeing my methodology, you'll also get the intraday trading strategy that I'll be using today to trade the euro-dollar. And if that wasn't enough, if you stay until the end, besides the workflow and the intraday scalping strategy for today, I'll also show you how you can. Follow my live market analysis every single day, so pay close attention to this video because we're starting with the methodology right now. The first thing we do to plan our daily trading strategy is a top-down analysis, where we understand the market context from a higher time frame down to a smaller one. That's why we always start our analysis on the daily time frame, looking for our latest structural point and key zones to understand price direction at a more macro level. As you can see, we're on the daily time frame and our latest structural point is bearish, as marked here on this matrix, where we have the high and the low. Once we've identified our structural point, we start reading the market context. Right now, we're in the retracement of the last bearish structural point, having taken much of the liquidity left at previous highs. While it's true we've had another downward move and we're currently a bit below the 50% mark, therefore we need to see if the price wants to continue falling. To do that, we should drop down to lower time frames and see if there's a structural change indicating a bearish direction, or if it's just a small internal pullback before continuing. To rise and finish taking all this liquidity. So we understand that on the daily time frame, we're in a bearish direction with a bearish structure. Currently in this retracement after another small drop, so we must keep moving down in time frames to keep understanding the market context. So the next step we always take is moving to the 4-hour time frame. Let's go. Now we're on the 4-hour time frame, and the methodology is the same as we followed on the daily chart. First, we identify our latest structural point to show us the direction on this specific time frame. If we look, our marked structural point consists of the high and the low. It's red, so we also have a bearish structural point here, meaning that on the daily time frame we remain bearish after the retracement we saw earlier. And on the 4-hour time frame, this final movement has also made a bearish structure shift, indicating that the price direction here is now bearish as well. So, once we understand our last structural point and the direction, we mark the inefficiency zones or blocks closest to the price where it might reach. As we see in this last bearish structural point, the price left an inefficiency zone in these candles I've marked, so I'll keep it there as a key area. If the price continues rising during this retracement from the last bearish point, it could bounce and react there, so it's a zone to keep in mind. We also have this zone down here from the 4-hour block, in case the price keeps falling to create a new lower structural point. It's another potential reaction area. On the upper side, if the price continues its retracement and hits a new point, though it's a longer move, we have an inefficiency zone that would clear all pending liquidity. This includes the previous lower high and other pending highs from the left side of the chart. With that, we've finished our 4-hour analysis. We now know the direction for both the daily and the 4-hour time frames. So the next step is to analyze this upward retracement from the last bearish point on the 4-hour chart. We need to see if lower time frames are bullish or if it's just a small pullback before dropping further. Our third step is to move down to the 1-hour time frame and start analyzing the market there. In the 1-hour time frame, besides marking our last structural point, we'll also mark the nearest pending daily highs and lows for the price to take. If you look closely, I use an indicator with yellow dotted lines that makes it easier to see the daily high and low. Our pending low is from last week, specifically Monday's low at the bottom, which is marked here with the dashed line. And our nearest liquidity zone for highs is at this dotted line here, since it's the previous daily high. They're still a bit far off. Before that, we have the 4-hour FVG zone we saw earlier, and below that, the 4-hour block from the previous time frame. Additionally, we also have a fair value gap zone on the 1-hour time frame. It's always important to mark all order blocks and inefficiency zones across every time frame. Once marked, we focus on the 1-hour price action from this week. After Monday's weekly range opened, we saw a move on Tuesday. That bearish move dropped more than 30 pips below Monday's low. As you can see here, we broke it by 41 pips. This suggested we might see bearish movements throughout the week, much like the price action we saw on Wednesday and the movement we've experienced during today's opening. Also driven by fundamental news coming from the United States, as a judge has recently blocked the proposed tariffs that caused the price to drop, and now it's been recovering. We also need to consider this time frame, since our intraday trading runs from 9 a.m. to 10:30 a.m. in New York, is to check for major news related to the dollar during those hours. For that, I use this indicator at the bottom, which shows the most important dollar-related news during our trading window. As we can see at 8:30 a.m. New York time, there are two major news releases that could cause sharp movements in the euro-dollar pair. Therefore, if you don't fully understand how to read fundamentals, my advice is to avoid having open trades or looking for entries right before or after these news releases. As I've mentioned, my trading window starts at 9 a.m, so the 8:30 a.m. news happens just before I begin my session. By 9:30 a.m. we can trade more calmly once we see where the price has positioned itself or which direction it intends to take. So, right now, we are still within a bearish structure. Therefore, on the daily time frame, we're bearish. On the 4-hour time frame, we're also bearish. On the 1-hour chart, we're still bearish. In this pullback we saw on the 4-hour time frame, we've reached the upper zone, and we need to see if a structural shift occurs. At the top, by breaking the previous high on this 1-hour time frame, or if the zone holds and we continue to drop. This helps us understand the market direction and context across all timeframes. We can also see that we're following a sort of trend line on the 1 hour time frame. So, our final step is to move to the 15-minute time frame. During the Asian and London sessions, and what potential moves might occur in New York, while also identifying our current structural point and direction on a lower time frame. First, as with every time frame, we mark our latest structural point, which, as we can see, is formed by this high and this low. If you don't know how to mark the latest structural point, check out our YouTube video titled How to Mark Structure Correctly, where I explain a very simple method. I highly recommend watching it, as we can see here the latest structural point is the same as on the 1 hour time frame. After the strong bearish move at today's open, we've been in a pullback, where we saw the Asian accumulation and a bullish London session, where we continue making internal highs. So we need to see if price wants to take the liquidity from this accumulation, change the structure, and from there reach the 4-hour FVG zone, or if instead we look to hold the last structural point and then continue the drop toward the 1-hour FVG and the lower 4-hour block. To summarize, we are bearish across all time frames, currently in a retracement of the last structural point. On the 1 hour and 15-minute charts, as well as the 4-hour retracement. So, given this context, we need to see which projections we'll use for today's New York trading session. As you know, our trading is always based on projections. Once we start at 9 in the morning, we wait for one of these moves in these directions, based on the projections we provide, and that is where we look for high probability trades in potential bounce zones. Now that we've seen this, let's launch today's projections. Here is the trading strategy for your intraday and scalping operations today. Now that we understand the market context, all directions, and have clearly marked the zones where price might go. With that said, let's look at the projections. First, we'll look for a continuation of the bearish movement we see in all directions. As mentioned, we have a bearish structure everywhere. So, for a power of 3 move, we could see accumulation and upward manipulation in London, reaching the top of the last structural point. Then, if price creates a lower low relative to our internal structure and gives us a shift internally without respecting any of these 50% inefficiency zones. Once we're below the open, I'd wait for a retracement to an order block or inefficiency within this new internal structure on the 15-minute chart. And with that, I'd look for a sell entry targeting the 1-hour FVG zone at the bottom. This would give us a power of 3 daily move with accumulation, manipulation of the Asia high, and distribution, provided we get that internal shift. Ignoring this FVG zone, leaving an order block or inefficiency on the retracement, and then we sell toward the 4-hour block and 1-hour FVG. This will be our first projection if price continues to respect this last structural point on the 15-minute and 1-hour time frames. If price moves up and creates a new structural point toward this 4-hour FVG, and if it respects that zone and gives us a structure shift on the 5 or 15-minute chart, at that point I will look for a sell again to fill these inefficiencies that we have right here. Now, we'd be trading the retracement of a new bullish structural point as the price has left us. The liquidity from this accumulation, so it's accumulation, manipulation, and distribution until the start. We'll trade the daily close with a pullback once price respects this area. Of the 4-hour FVG, this will be my second projection for today, provided that price takes the liquidity from this accumulation here and respects the 50% level of that FVG. Gives me a structure shift on the 5 or 15-minute chart. From there, I'll look for a sell again unless the price creates a new, higher structural point in this area, failing to respect the 4-hour FVG zone or the 4-hour order block area as well. Then I'll wait for a pullback to an inefficiency zone and look for a bullish continuation, aiming to take out the liquidity of the previous daily high. As I said, we're waiting for a structure shift, ignoring the FVG in the block, leaving us with a new order block or an inefficiency zone at the base of the new structural point. If not, we wait for another one, then the pullback, and look for a bullish move toward the previous daily high's liquidity. With this, we have our trading strategy for today, featuring these 3 projections that I'll be personally following throughout the session. As you can see, this methodology is based on a deep price analysis that allows me to fully understand the entire market context. Of course, this video is a condensed version, but the goal is to use this analysis to grasp the context and then map out these projections once. We've identified the nearest order blocks, inefficiencies, or liquidity zones where price might go once we are within our trading hours. With these projections, you have a clear plan for today's session, which, as I mentioned, runs from 9 AM to 10:30 AM New York time. And as I said at the start, besides learning the methodology and the strategy, I'm also giving you the chance to follow the live market with me. I do this through our new Discord server, where you can join a community of traders and I share my live market vision as it happens. Sharing the movements, what I'm looking for, what to avoid, precautions, and so on and so forth. It's like live trading support. No signals are given, but you can be part of this community we started building just last week. Setting everything up and giving it shape. So if you want to join this community from the start, and if my market approach resonates with you, if you feel this trading style brings you peace and consistency, I invite you to join us via the link in the video description. You'll find the Discord link there and we'll be waiting for you. That's all for now. You have the method, the strategy for today, and the way to join us. Live trading session. Good luck to everyone. If these types of videos help you with your training and your overall trading style, subscribe to the channel so that every day, whether it's through these videos or our live streams, you can watch them and stay tuned. Turn on the notifications, and if this type of video helps you, give it a like to help me grow. Good luck everyone, and I'll see you in the next analysis.